Hello, I'm Robert Garcia with Farmers Insurance, and I own my own agency. I'm in Lucas, Texas. It's on the fun side of Allen, Texas, so don't get mixed up with Lucas and Allen. But actually, we kind of mesh together. I can throw rocks and hit Allen. Oh, right in front of the camera. You want me to do that? I like it.
There you go.
So as you can see, my life is run by redheads, okay? So the one in the flower shirt, that's my wife. And so we co-own the business together. So she makes sure everything runs good. I just kind of smile and wave and I talk to everyone. My goal though, with insurance always is it's like, it's almost like we're like used car salesmen at times because there's a bunch of insurance companies out there, right? And my goal always with insurance is to make sure you understand what's covered. There's a lot of coverages out there, and there's a lot of coverages that don't even make sense, or you don't even know what you have, especially on your home. The biggest thing we're seeing right now is, and I'm going to point to all the realtors and credit people, is inflation. So where a 2x4 last year used to cost, where a 2x4 last year used to cost $3, it now costs $9. So it's gone up 3 times. So homes values are tripling. They're going up by 150%. So a home that used to cost $250 last year now is going to cost $400,000. So if you're underinsured, your loan's not going to go through. If you get insured and you're underinsured and the house burns down, well, they're only going to pay you for what you're insured for. So the other difference, whether it's $150,000 or not, you're going to lose it. So my thing, my tagline, whatever you want to call it, is I don't want to treat you like a number or a policy. I want to treat you like family. So everyone that's in our agency, I try to treat like family, and that's how we run our business. So thank you, Amber, for having this.
Awesome. Thanks so much.
Yep.
Yeah.
Does anybody have questions?
Yes, ma'am.
So if I have a house and it gets burned down.
Yes.
I've had my house for 20 years.
Okay.
So my mom is old, less than that.
Okay.
And it burned down today. What I'm covered for in my house wouldn't cover it. Is that what you're saying?
So what you built your house for 20 years ago might have been $150,000, right? But that $150,000 house today is either going to be double or a little bit more. So if you have it insured for $150,000 and it burns down to the ground, you are going to be short because of the inflation and the prices going up in the market today. So it's very important that you always make sure what your house is insured for. Just because people don't realize it, and there's a lot of companies out there that they'll put the value that you say your house is worth. Well, you can't build it for those prices today unless you're your own personal builder. Which, I mean, Dana, you might be a personal builder. You're that fantastic.
So for instance, so if someone had a home, like you said, for 20 years, do they need to contact you, like maybe to get like update their policy?
Yeah.
Is that how that would work?
So, yeah, no. So the replacement costs on the home, what we do, what my agency does, is a lot of agents, what they do is they put it on autopilot, and they expect you to just leave it on autopilot. What I do is when your home's renewing every single year, a month before it renews, I call you. Hey, have you had some life changes? Did you win the lottery and just happen to put like gold toilets everywhere or whatever you want to do? There's some people that do that. Like you'd be surprised. There's never a dull moment. And if you have money or if you come into money and you remodel the entire house, you want your insurance to mimic the amount that you put into your home. So it's a very good thing that you go through your insurance every single year, even your auto insurance. Auto insurance is super important and it affects your home rates. They give you some huge discounts with auto and home rates. So.
Appreciate it, Austin.
You're welcome.
So Lisa Kay couldn't be here, so I just want to let you know I've done many closings with with Superior Title and Abstract. They are awesome. They actually have a plant inside their office right over here off of Preston, very local. They actually do their full title and everything right there. They've always done great customer service, and they do remote closing, which is a wonderful thing for the buyer. They can come to your place of work or whatever to do that notary work in case you have a really tight schedule when it comes to closing. So I just want to let you guys know that Lisa Kay just does an awesome job at Superior Title and Abstract. Pink, big pink.
Can you elaborate on what title companies do?
Title companies actually make sure that the money that you bring to closing goes where it's supposed to go, that everybody gets closed out, and they also sell title insurance, which basically means that the long person who says, oh, maybe my ancestors own this house. No, they can't do that. The title insurance will actually say, okay, this is all free and clear, including any encumbrances on there are all taken care of by your title insurance. So always get it. It is very important. And the other thing is that you don't want any claims. They actually pay up your taxes to the date. They make sure everything's settled out perfectly. So you don't have anyone coming back saying, hey, I didn't get paid on this deal and I want, to take over your house. You don't have anything like that happen. So that's what a title insurance does. Anybody have any other questions? I'm not a title person, but go ahead. Well, all title insurance in Texas is pretty much the same. Mostly it's going to be awesome customer service and then finding any problems before you get into any issues with the contract. Because say the seller has not paid something, or maybe, maybe there's like a problem with the survey or something like that. Well, you want to make sure that you know all of this stuff up front, because maybe you plan on putting a pool into your backyard and there's not enough room to do it, or your fence encumbrances on somebody else. You want somebody who's going to sit there and look at everything and say, okay, this is a good title to pass on and move to the next buyer. That's basically what they're doing. So it's going to be absolutely customer service, but the title insurance will actually cost pretty much the same all the way across. And then you want somebody who can expedite that title work and get it out pretty quick, because once you're in a contract, you don't want to sit there and find out, hey, this is not going to work for you once you're already in, because you've wasted your option money, your earnest money's all in the title company. You get your earnest money back if they can't do title, if they can't clear title, but you want to make sure you have somebody good taking care of the hard part. Yes, sir. It's set in an escrow account, and so when you put your money into the title company, and actually option money now goes to the title company as well. Still goes to the seller. You don't get it back. You do get a credit for it at closing, but the title company now handles all of that for you. So basically, that means that you're not giving your money, unless it's a builder, you're not giving your money actually to the seller. So say you put $1,000 of earnest money down, you want to make sure you can get it back if they can't give you title. If you have an inspection and find out there's an issue, you want to make sure that you can get your money back if there's not a problem. So the title company handles all of that for you. They put it in an escrow account, and if there's an issue, you talk to your real estate agent, they can get your escrow back as long as you're not in breach of your contract somehow. Absolutely.
So the title company gets involved when the option money goes away.
They do now, yes.
Right, first contract. But I didn't realize that the title company does the title search at that time. I thought they do the title search at the time of closing or prior to closing.
They do it prior to closing, and you should, like whenever you have a listing, it'd be a good idea. If you think there's something on that title, get it done before you actually get it on the market. Because if there's something that comes up, then you've got a seller and a buyer, and everybody's in contract. It's a lot harder then.
Yeah. It's important to have somebody that has the knowledge of those things that can be proactive about it, because sometimes if they get the contract and they sit on it for 7 days and they're like, oh my goodness, we're closing next week. This is a cash deal. I thought it was going to be easy. And then they find out that maybe this specific property has an house and an acre, and then they thought that they had this 0.29 acres over here, but then it turns out this 0.29 acres was never platted into the survey. So then they really don't own it, but they thought they did. And here they are trying to sell a property that they don't own, even even though they do. So then but it's important for someone to know that things like that happen and to try to get that taken care of and resolved before closing, because it can get a little cloudy whenever there's things in that sense. And then everyone's upset because they're emotional, they're ready to close on their house, and then they say, oh, I'm sorry, it's not gonna happen, so you don't want those things to happen during a transaction. So it's great to have someone who knows how to handle those situations early on so they can make a smooth closing at the end.
Yeah, it's nothing like finding out that your seller thought that they didn't have anything on there except for their mortgage, and then they have an IRS loan or an IRS lien or something like that, and they actually have to bring money to closing. It's better to know everything up front. Absolutely. So they don't leave the buyer kind of in a bad situation. I agree.
So that brings me to another question.
I
Right?
know.
Well, I love the question.
So if you're a buyer and you're talking to this seller and start the process, pay your option money and get a title company involved, the title company almost to do the search has to be paid, because there's a potential that they won't be paid for doing the title search, right? Because they may find something not closed.
Yeah, that's
Exactly.
true.
So would they do this in good faith, right?
Correct, yes.
Yeah.
I think that will cost money. You might not qualify. That's it. I think, or you might go with someone else. I think that for that person, it's part of the.
That's good to know, thank you.
Okay, all right, it's actually officially awesome.
It's officially our turn.
So,
Good go.
we can do it one more time.
Okay, one more time. That's awesome.
You guys are like the perfect height.
That's good.
Okay, I need to see it. Okay,
Awesome. See, that tells you everything. You don't even need
All
us
right,
to
let's
do
go.
it. All right,
Go
perfect.
ahead.
So this is about us here. Amber and myself, there's a little bit more. So do we do this clicking?
Yeah,
thing?
there you go.
Okay, tell them about you.
Awesome. Well, I'm Amber Boyd. I'm the broker and owner of 401 Real Estate. And I, as you can see, am extremely hardworking and energetic. I married my husband in 2011. We have two little ones. We're in the trenches with a 2-year-old girl and a 4-year-old boy. Emma is the fireball. I'm always having to chase her around and get her off the ledge. She's just gonna fall off the playground, And Eli is more of a laid back one, likes to play video games. So I've got quite the polar opposites, which is great. My husband and I, we actually run a food truck on the side, and we have a lot of fun with that, taking him to real estate events or just doing a lot of things in the community. Mr. Robert can attest that we got some pretty good food, so I'm a little biased, but he's good. So we love to do things out in the event. Go ahead. We have all kinds of stuff. So we have like a split top sandwich where he does a chicken strip with different types of sauces on it, all just homemade fries with all kinds of good stuff. It's not probably the most healthy thing, but it's delicious.
Maybe the pho fry is pretty good. It's like
Yeah.
pho, but it's on fries.
It's great. Yeah. So it's called Eddie Ray's Street Eats. We opened last year, and he's been doing a great job since he started. I know I'm no spring chicken, but I have been doing real estate my entire adult life. So I'm going on 11 years in the real estate industry, and I opened my own brokerage about 5 years ago at the ripe age of 25. And I just really am passionate about helping, clients, whether they're renting or purchasing. There's no deal that's too small or too big for me to handle. And just like with Mr. Robert, like we take these clients in and they're family to us. So whether we're trying to just help them with a temporary place because they're building something, or, they need to sell a property for someone who's 82 years old and needs to get into a place where maybe they can just enjoy the rest of their life without having to worry about all that. So it's just something that's really important to me. And I've just enjoyed being able to do something with my life that I can really impact people's lives with. And I get to do that through real estate. So it's a little bit about me and what I'm doing.
Awesome. Okay, so I've been married for 25 years to the same man.
Good point.
And I love coffee. I'm drinking coffee all the time. I am a proud Marine mama. I am so proud of my son. He's 23 at Camp Pendleton, and hoorah, to say that. And I just had he's actually home for 10 days, and it's just been so awesome. We have not seen him since COVID, and it's been well over a year. So that was really awesome. I have 2 other children. One of them is a really good bowler. I think his average is like over 200. He doesn't have a handicap anymore. It's like 213, 217, 230, something like that. He just graduated. So I think I'm going to be an empty nester soon, except he doesn't know how to drive. So maybe
You're
not.
still a taxi service for now.
Yes. Unless I start charging him, I can do Uber.
There you go.
And then my other child is a wonderful artist. She is very, very talented. And then just something about me you may not know. I am actually a Star Trek fan. And it's actually the original series. This is something, I actually have a degree in hamburgerology too, because that's a whole nother story. But so original series, and I love how Captain Kirk does his overacting. I don't know why, but man's almost 90. But it's just that, those songs he does, when he sits there and he does hey, Mr. Rayman, I can't remember. It's you just have to Google this kind of stuff on YouTube. It's funny. So I've been doing real estate since 2004. Before that, I managed a multi-million-dollar company, and it was McDonald's. I managed it for 20 years, won a lot of People First awards and stuff like that before. And anyway, it just seemed like a really good transition. My husband was a loan officer at the time, and he told me, Laura, he says, you really need to get into real estate. I work with a lot of really dumb agents. You will fit right in. And I was like, is that a compliment or not?
Oh gosh.
And
you're still married?
I was still married, yes. Anyway, so so here I am, a real estate agent, and awesome. And I don't speak any Spanish, but I do know how to order a cheeseburger any way you want it in Spanish. So this is a little bit about us. Go ahead and tell them.
Yeah, so as we said, I graduated from the big city of Farmersville, Texas in 2008. In 2010, I was like, hey, let's do some real estate. So I got my real estate license. 5 years passed, God put it on my heart to open my own brokerage. I had no business experience as far as owning a company, but I was going to do it anyways. And so I opened that. And then in 2020, during a worldwide pandemic, my brokerage literally quadrupled in size, and we've expanded to 4 major markets. And I think that's just super exciting to me, the fact that we can take this company and my vision and grow it across the entire state of Texas, even during a pandemic. So that's just something that's just really proud that I was able to. I have 60 agents across Texas that work with us. So I'm really proud of that. Thank you.
And about me, obviously, I managed a restaurant for 20 years, and then I got my real estate license. And of course, as soon as I did that, my husband stopped doing mortgages. So anyway, and then in 2012, after the recession, when things started to kind of get back into a normal progression again, I started doing home buyer seminars, and I found out I really love to help people to get into their next phase of life. I just really like to do that. And then just recently, it's been 2 months, I've joined Core One Real Estate. I've known Amber for a year now, and we just actually are just like, It's like we're always thinking each other's thoughts. It's
Definitely.
really weird.
We definitely complete each other. It's like I didn't even know we needed each other until she came on board. I'm like, where have you been all my life? Like, it's been great.
It's crazy. Okay, so tell them about your company.
So it's Core One Real Estate. I mentioned that we have, we cover Collin County, North Dallas, Hunt County, Denton County, pretty much literally the major markets in Texas. We were established in 2015, and we are really community oriented and customer minded. So again, we just really take the approach of not just trying to get a customer out the door and into a house and collect a paycheck, but we really want to impart a little bit of ourselves into their lives and hopefully make their experience better.
So the buyer's roadmap, first off, you want to meet with a real estate agent. And the next thing, you want to get pre-approved. And we're going to let Larry elaborate on that. Searching for homes, that's the fun part. Does anybody know what kind of market we're in right now? Are we in a seller's market or a buyer's market? Yeah.
Ding, ding,
Ding, ding,
yeah.
exactly. So in a seller's market, unfortunately, there is usually more than one offer. So you actually have to be very, very competitive and very creative in how you do it. Love letters, I wish they always work, but they're not always working like they used to because people have 10 to 15 offers. So the best thing you can do is have a really good pre-qual, be ready to go. And I told somebody the other day, they wanted to come look at houses. They were coming from out of town. I said, this is how it goes. On Friday, they come on the market. On Saturday, you can look. On Sunday, they're calling for highest and best, and they're not doing any more showings. So you just have to be ready to go. So the best thing you can do is get all your ducks in a row. So when you're ready to make that offer on that dream home, you're ready to go. And will the market always be like this? Probably not. It'll probably slow down. So, you can relax a little bit. If you lose a few offers, it's good experience.
Definitely so. It's important to have an agent who's creative in the offer process, who's going to be communicative with the listing agent, because, you could just say, let me go look at this house. And then let me just type up this offer and type it up and you send it in. And that's it. You might not even call the agent to tell them, hey, I sent you this offer. But if your agent calls the listing agent and says, hey, my clients are really interested in this property, what would I need to do to get the seller's attention? What can I do to stand apart?
Do they need a lease back?
Okay. Do what? Okay, great. Okay.
Okay. And then, are you ready to buy? Do you have steady income? Do you have a low to medium debt to income? We'll let Larry cover that. He does it. Do you have cash for a down payment? There's several different programs that are really awesome out there. Larry's going to go over some of those. But maybe you're going to want to do like a grant program or do a USDA. You still have to have some money for closing costs because the sellers are not paying closing costs anymore. So you'll need some good documentation. Larry's going to go over that with you. And you need to make sure that you have good work history with good steady income coming in. Like for instance, if you're self-employed, that's going to be very, very difficult because most self-employed people write off everything. Mm-hmm. So that's good. That's when you get into some creative stuff. You want to do this next one?
The original estimates was because my employees are on 10 So the creativity behind that. So will you be able to educate them or say this is what you need? Or
Larry can educate them.
Yes, you're right.
He's the man. Yeah, Larry's the man.
Oh, that. Thanks. All right, cool.
Okay, so the first thing you want to do, we're going to talk about the lender, which Larry will go into that. But when we're talking about home searching, let me tell you, the most important thing is location. Location, location, location. If you want to sell this house later, this is going to be really important that you're in schools and that kind of stuff may not be important to you now, but maybe there are in the future. Those things are going to be really, really important. The further out you get from Dallas, the more you can get for your money. So if you're on a tight budget, you might want to consider places like Anna, maybe even Sherman. Sherman's actually becoming pretty hot now. How much square footage? Just because it's a 1,200 square foot home doesn't necessarily mean it's going to be too small. It's all in the floor plan. Absolutely. How many bedrooms, how many baths, what kind of style you like, what kind of features. Are you going to want to have a big backyard so your kids can play, or do you not want any yard? Those kind of things. And
so as far as we talked about the search, the agent, we have access to the MLS. We also use our network. Another thing we can do is find properties that are not on the market. So for instance, for sale by owners, maybe something that's expired, You want to have an agent that can be creative in finding that inventory that maybe is not on the MLS, which has a lot of eyeballs on it. So we have a lot of different ways to help find your dream home. As far as the customer, you're able to access on our website. You can see signs in the yard, open houses, model homes, all kinds of good stuff as far as kind of how we define your property. And then we have a lot of high-tech tools in the sense of like being able to customize a search and make it send you properties as soon as it hits the market. So that way you can call Laura and say, hey, I found this house, let's go right now. You know, I know it's midnight, but hey, let's get my slippers on, we're going. And we're able to find them as soon as they come up. So it's important to know that you have the tools out there to help find that even in a competitive market. But
when you make your offer, make sure it's the home that you guys want. I know a lot of times because the market is so crazy, we just want to get a house, and it's okay to have to settle a little bit. There is no perfect home unless you're going to build it from scratch. Okay, think about what the seller wants. I've seen a lot of lease backs. So you close on a house and maybe the seller's in it for a week, sometimes longer. Earnest money needs to be about 1% of what you offer. So if you're offering $200,000, you need about $2,000 in earnest money. The down payment amount, we'll let Larry cover that. And then there's important dates that need to happen. You want to get your inspections done as soon as you get the contract in place, because you only have a short window of time to sit there and find out whether this house is for you or not. If there's something wrong with it and the seller's not going to fix it and you're not comfortable with it, you want to be able to go, okay, I'm going to back out and find the next house. And then also your offer, you know, right now everybody's doing highest and best, but they can actually counter back, they can actually decline your offer, they can even not look at it. And so that's some of the, you want to make sure your financing is the best financing put forward, because what if the house doesn't appraise? Almost everything's going above list price. There's a lot of creativity that needs to happen in our offers right now. That's why you need good agents.
Absolutely. And when you're what happens when your offer is accepted? Within 2 days. So there's a lot of sense of urgency. Once you get your contract accepted, the earnest money and the option fee goes directly to the listing agent. We have the appraisal, inspection, things like that. Mr. Robert talked about home insurance, and then we'll let Mr. Larry again talk about the mortgage side of it, which is really the most important part of buying a home.
Yeah. And the final walkthrough, you basically want to make sure the house is in the same condition that you contracted in by the time you close. So a lot of times I'll do a final walkthrough, even if there's going to be there, you know, I know they're going to be moving and everything, but I want to make sure that nobody's sit there and taking off the back door or taking out stuff that we didn't know was going to, you understand what I mean?
Definitely so. So there's closing costs. As you can see, you have the property appraisal as something that's prepaid for the buyer. You have your home inspection. There's processing fees, of course, underwriting, all these little things that can add up that a lot of buyers are not familiar with. So just keep in mind that just be prepared. And when you have an awesome lender that's going to give you all that information ahead of time, you can go into a contract with confidence, knowing that you're not hopefully going to have a surprise and say, oh my gosh, I need $6,000. I thought this was going to be $2,000. And so it's just important to be prepared whenever you're doing that closing.
I'll cover that.
Yes, okay, perfect.
So closing day, it's your big day. This is going to be real exciting. It's about an hour to sit there and close. I mean, obviously you could do it remotely. I do encourage you to go to the title company because they will go through all the paperwork. They've got the experience. The other people are just sometimes notaries. So you have to bring your identification. Everybody who purchases the property needs to be there. If you're married and maybe you've actually, you're getting the loans only in your name, your wife still has to come and sign on the deed of trust as well. And then for your down payment, the money that you need to bring to closing actually has to be wired, or it needs to come in with a cashier's check. You can't just bring your checkbook in and write a check for $10,000. They won't accept that title.
Or bring a briefcase with the money underneath your mattress. And you're
Yeah,
like,
no
"Oh,
mattress
hey,
money."
you go in my house. Yeah, unfortunately not. Okay. And then in your packets also have all of our contact information. Our contact information is up here as well. We love the
And
opportunity.
we also have the entire presentation in the packets as well. So, all right, great.
Any
All right.
questions? Quick questions?
Quick questions?
Okay, so thank you very much, Debbie.
Thank you.
So my name is Daniel LaRue, and I'm it's a computer program that is really returning to like law. You guys, they do it all the time. A short-term attorney in Dallas is back to 10 years ago, the genius that invented this system. Oh, the genius that invented the system, he said, what are you doing? You're following up on everyone's nationwide. I want you to open your own company. So that's how D&G got started. I'm the D, my husband Gary's the G. Not real inventive, but hey, you know. Okay, so the most important thing, what is a FICO score? What is that? Guys, you know, in the 50s, hardly anyone was able to get the credit. Okay, you had to know somebody, you had to be from the right side of the tracks, right? So this mathematician and an engineer built an algorithm, all right? So this scoring formula doesn't have anything to do with your race, your religion, your sexual orientation, doesn't have anything to, it's an algorithm to see how likely you are to pay your debt. So it can't see color. It can't see income. It can't see how you voted. It doesn't know if you're diabetic. It doesn't know anything. It's just an algorithm to tell the banks how likely you are to go ahead and pay it back. Okay, go to the next. Okay.
Oh, there it is.
Okay. So your credit score can save you a lot of time and money. Did you know that your credit score is more important on your automobile insurance rate than your driving record? You know that? Did you know it affects your promotion at work? Your credit score is tied to everything. Everything is attached to that number. Okay? Romance. All right, so if you're thinking about getting married, full credit report on them. It's the truth. Am I wrong? I know I'm right. Okay, and you're like, why are credit scores so confusing? All these numbers are all different. Okay, FICO is the Coca-Cola in the credit score world. That's who all these people want to be, but can't. Okay, so that kind of, I'll just say bastardized it, right? They just added their own to make it. So you see all the different numbers here, but basically they all manage to get into the same risk bucket. Now, if you'll look at the brochure here, okay, on the back, you'll see those colors. Those are basically risk buckets. You've got your poor, you got your fair, you got your good. Okay, so these numbers will fall into this. But the FICO credit score, that's the lending algorithm. That's what the mortgage person does. Let's say you're with Credit Karma. You pull your credit report and Credit Karma says you're a 650. You're like, woo! So you call these ladies. So they send you to their lender. Their lender does his pull on the same day and suddenly you're a 585. You're like, what the heck? It's a stronger algorithm. Okay, does that make sense? Yes.
So, because this is what drives me crazy.
Oh, wait, no. Let's come back to the question because I got a lot of stuff, but I may answer that question. I may answer that question. Go to the next one.
There it is.
Okay. So why is my score so much lower? Just because it's a different algorithm. See, that one isn't wrong at all. Okay. When you pull your own credit report, it doesn't affect your credit score at all. You can look at your credit report unlimited number of times and it won't affect you. Now, here's the deal. If you're with anybody other than MyFICO, that's myfico.com, they have the lending algorithm in there. So you can literally get a mortgage algorithm without a hard pull. That's a big deal if you're not sure where your credit score is. Okay, so I know I talk to lenders that have never even heard of eOscar. eOscar is a super data storage computer. Any creditor that wants to report to the bureaus has to upload all that raw data into eOscar, right? That's where Experian, Trend, and everything pull their data from to come up with the credit score. What makes our system unique? Our system can read the code in the eOscar. So we know in raw data, okay, now, here's some really important stuff.
What is yours?
It reads the algorithm. It can read inside the eOscar. So it knows in raw data, date, time, section, paragraph, the FCR, the CPA. It's all going to be in raw data. So the letter writing. Now, here's important information. If you're looking to build your credit score while you're looking to get a house, right? That lender algorithm requires a minimum of 3 active open positive trade lines in your name. That means an authorized user, because legally an authorized user is not responsible for the debt, right? That other person is. So it doesn't weigh as much to help you. However, if it goes negative, it hits you just as hard. So you gotta be careful. can be a double-edged sword. A good little mix is 2 revolving and 1 installment. Of the 850 points available on credit score, 255 points come from what's called credit utilization, how you balance your finances. That lending algorithm, think of it like a teeter-totter. That lending algorithm wants to see how you balance. If you're maxed out, it hurts you. You go over the limit, you get another slap. If you're at 0, it also lowers your credit score. So you need to balance it, okay? For the lender algorithm, about 20% of the balance. All right, so if you got a $10,000 credit card, you never ever, for one day, want your balance to go over $2,000. You also never want it to be a 0. Okay? Now, of all things being equal on 2 files, the one with the $10 balance will have a higher credit score than the one with the 0 balance. The way that algorithm works. Next one. So, how can I help my score increase? Don't close any credit cards. Don't listen to Dave Ramsey. I'm getting great for debt. It is not good for credit. Credit's the ability to obtain debt. Make sense? Okay. Keep all revolving debt to 20% of the card's limit and never 0. Unauthorized user, very slippery slope. The only time I would really recommend being an authorized user is if it's your mama and she's got 30+ years of perfect payment history and she's not even 50% of her money. Okay? That way you can borrow their history so your average age of account increases. Okay? And we'll come back. If you owe more money on your student loans than you borrow, refinance them. Anytime you owe more than you borrow, you're in trouble. Okay, and what's worse is a lot of times those student loans, you have 7 student loans, they're all in deferment, they're not helping you at all. Right? Because I almost guarantee you owe more than you borrow. So what I tell my clients is if you can pay it to where you owe as much as you borrow, that's great. Pay it, make it active, because now active accounts will help you. Deferred accounts don't help you. Okay? Now, if you are one of those people that keeps getting these things in the mail, say, hey, give us a chance to shop your insurance. Come over here and let's sell you a car. These are called smart encoding. All right, every company sells, every bureau sells this data. I want you to get off of that. Okay, go to optoutprescreen.com. It's free. Pick the 5 years so you don't get anything. Because what happens is when a marketing company goes to the bureau, CRAs, they'll do a massive pull to try to fill that order. Okay, that pull by itself is not. Okay, it's like a drip in a cup of coffee. It's not that big a deal. However, if you're getting multiple offers, that also means you're getting multiple team time polls, and they do that. This is a free service. Get on it now. Okay, go to the next one. Oh, okay. So this is the hard one. We took the SCRI and basically put it in 3 bullet points. 1,500 documents. Okay. Whatever's on your credit report must be 100% accurate, regardless if the debt is owed. There are fines and penalties in place if that's not true. Under federal law, any person who knowingly and willfully obtains a credit report from a CRA, that's credit reporting agency, under false pretenses, i.e. getting a credit report on an individual without his or her permission, shall be fined under Title 18, United States Code, or imprisoned for not more than 2 years. All right, so actually, we have a conversation about this. When you go buy a car, you go test drive that car, I promise you on the back, about 3/4 of the way down, it's called permissible purpose. You give that company permission to do a hard pull every month until they see that you have purchased the law. Everything you have added on. So if you're one of those people that signs and dispute the inquiries, that can be very dangerous for you. Okay? Because what happens, because it's illegal, they can go to jail, they can get fined, they're not going to do it. Right? Companies are subsidiaries of other companies, and you don't know who it is. So you dispute the inquiry. That dispute goes over from the bureau to the head of the corporation, whatever corporation that may be, right? And it goes all the way down. Now, during this investigation time, this company can be barred from reporting to the bureau. Big egg on their face, right? So it makes it all the way down to that lowly salesperson who can be fired now, right? Because of all the time and energy already wasted. They pull out the document, bring it back up, goes back over to the bureau. Now your file is not going to be disputed, which is a bad thing. You don't want that to happen. So don't dispute. There are easier ways on that to happen. Okay? The next one. As we know, bad debt happens to good people. Right? Job loss, death, divorce, medical issues. Something happens and you can't keep the payments up on that credit card because, quite frankly, it's going to be the legal. Okay, so after 180 days of no payments by law, that creditor must stop charging you because, you know, keep piling your money. When it gets to that point, they get to go three ways. Making it go is legal. They can hire an attorney, take you to court, you can go to the jail. Not in the house, you gotta go. Okay. Second route, they can hold on to that full color file in the farm after collection. Split whatever person. The third, the most common we find is that original creditor will charge the debt. They charge that debt off because they get it. And then what they do is they take that black and white copy and they make a black and white, they make a black and white copy of their full color file. They'll sell the black and white copy to the collection agency for the next one. That collection agency will try to collect on it. When they can't collect on it, they'll make a copy of their black and white copy, sell to another collection agency who has 180 days to collect on that. When they can't collect on it, they make a copy of their black and white copy, sell to another collection agency. I don't know if you've ever seen this on your credit report, but you can tell by looking, it's the same collection appearing again and again and again and again, right? When only one of those may be legal. Make sense? But on the bureau side, you're getting dinged for every one of them. Okay, go to the next one. Now, that's bad. That's not the worst. The worst you can happen about, say, 2.5 to 5 years down the road when he gets in the hands of what's called a junk debt bond. Have you heard that term? These are investors. They purchase millions of dollars of bad debt for hundreds of dollars. What they tend to do is they tend to change that date. It should have been years ago when that original creditor first charged it off, and they changed that date to the date they purchased it. And what that does is it makes that collection brand new, and it weighs much more on the credit score than it should. And it artificially. That's when they wrote the law. That's what my computer was specifically designed to go after. Okay, the next one. Okay, so when people call me credit repair, I roll my eyes, and this is why, okay? Because credit repair companies have to assume your identity. My system is a computer. It's a credit report from my customer. I don't have to assume your identity to help. If you've ever been to credit repair, they want to copy your driver's license, copy your credit card, they want to copy your utility bill, they'll even ask for bank statements and get a power of attorney. The system doesn't need any of that. Go to the next. Go to the next. Nobody's got that. Nobody, unless you're in the credit. Right? If I had a minute, you won't share it with credit repair. He says the law is black and white. So we offer education, information, use of a proprietary system. Attorneys have been working with what's almost 30 years now. So when you hear those large class action lawsuits, it's a computer company. Next one. Okay. So the first 45 days, the computer makes them prove what they're saying to the law. Second 45 days, it goes after violation. Most of our clients are 640 mortgage score lendable at that time. Go to the next one. So the next one, we'll just, you've got most of these inside your little, inside your, what do you call that thing? Go to the next one. Okay, go, keep going, keep going. So this client had been with the credit repair. Now here's my opinion. Anyone that charges you a monthly maintenance fee has no incentive to give you that. You are their residual income. We're in, out, and done. Okay, go to the next one. Is that okay? Oh, I've already come. Go to the next one. Yeah, I can go to the next one. Okay, so the first 45 days, what I want you to get mostly, no human hands touch the file. We're not writing letters. The first 45 days makes them do what they're saying to the letter of the law. Second 45 days goes after the violation of the computer already knows. Okay. Their choice, the creditor's choice, is they can either correct the file, re-report, and pay the fine, or delete the file. That the one in the middle of our brochure, that was my first client that didn't have a attorney conflict. I knew my system worked, but I couldn't prove it because everybody had a attorney conflict. Okay. And you don't want an attorney on that, so look for the same water. She goes talking to other people. Okay, so anything that makes it through our program, that's legitimate debt, meaning they can prove it or they didn't break any laws or they were willing to pay a fine. anything that makes it through, we've been IAP certified. That stands for, that stands for Independent Association of Professional Debt Arbiters. We're not attorneys, so legally we cannot speak to your creditors on your behalf, but we can guide you through that. As they know you don't know what to do. Let's say you owe Chase Bank $5,000, right? And they said, hey, Bob, pay us $1,500 and call us account credit. They tell you, man, that's a great deal. So you come up with that $1,500. 9 times out of 10, that people is not worried about it. And when you make your $1,500 payment, the 10 7 payment, what that payment legally did was repay that $3,500 back. It's taking out the little sell, certain seven cost all of it. And we've seen it. So we help you through that process. Keep moving with our fee is flat. So the next one. You go to the next one. So this one is actually what's on the back. This is what's on the back of the brochure. This is a real client, and it just so happens his numbers fit into those buckets I was telling you about. Okay, so he went from a poor credit score to a good credit score. Now that was based on a 37-year-old person with $250,000 loan. That's just the difference in interest. Crazy. Oh, well, go ahead and let me go to the next one. Okay, so for everyone that's here tonight, if this is something you want to look at or do, when you go to our website, DMG Credit, if you put HBS, oh, I put half price. I told you $300. It's half price. So your total out of pocket $600. When Gary and I got this opportunity, I want to be able to do 2 people. What are you doing? Do you have any questions? We're good. Sorry.
No, you're good. You're good. Thank you very much.
Okay.
And we'll answer. We'll have the whole panelist to answer questions at the end. Okay. So I'll try and make this quick because I got to use the restroom. Right. I've been drinking a lot of coffee. Questions loan officers should ask before taking an actual 1003 or a mortgage application. That's the code 1003, right? So basically, before I have you fill out an application, I should ask you a few questions first. I should interview you. I should sort of have a primer conversation to see if it makes sense. Most loan officers are doing this to protect their costs because it does cost money to pull credit, but sometimes it's better to protect your credit than to pull it, arbitrarily. Like, I want to know what you're working with. If I know that there's no way you're going to qualify, me pulling your credit might actually hurt your credit, and we would do that needlessly, right? I would tell you, you know what, credit's probably the last thing you need to worry about. You need to worry about this, this, and this, and then we'll look at your credit, right? So these are questions that I ask my clients if I can before they they give me their mortgage applications. Now, sometimes people see my application online, they fill it out, no problem, I'm gonna pull it anyways. But if I have a chance, I want to sort of give it an opportunity to protect your credit, okay? So
I should bring my credit score and my printout to you, so that way you won't pull it. Or can I fax it to you, so that way?
yeah, and that's a very that's probably like an advanced class, right? Or a conversation. But the truth of the matter is, what you find is not the same as what I find, because we are actually doing actual inquiries to the bureaus. Like, we're asking them, hey, can you please provide me this client's information? And we're paying for that information, so they give it to us. What you guys find, you're not paying for it, and it's not an inquiry.
Okay, I'm sorry. So that means I need to go to her before I can come to you.
It depends.
Because the only reason I'm sitting right now is I got employees right now they're doing everything right. But all of a sudden they come to you. All of a sudden you tell me, oh no, I can't find this and that. But you explain what's beautiful. After this, I'm fine with you. Because when I come to you and they come to you, it's like, oh, you like oblivious to what's going on, but you want to hear the story because you come and say all this on your credit report. So it's unfair.
Yes.
How
So
do we get around it? Tell me how we get around it.
my suggestion, just so you guys understand, if you really want to know where you're at, you do talk to me and let me pull your credit, because ultimately what I see is what matters.
When
Period.
you feel my pain by explaining to you, I got this on my bed, this and this, but she's explained, these guys know my credit, I paid this off, but you know what, I had a disagreement with it. But when you hear my story, when you be sympathetic to me,
Of course.
you're gonna go through it.
Of course, I have to be, because it matters. Basically, whenever you decide to apply for a mortgage, you're partnering up with us, okay? Because it's a partnership. You get a house, we get a commission, right? So it's a partnership. So I need to know within the partnership what I'm partnering up with. So I definitely have to be sympathetic to what you are working with and what you want to accomplish. That's actually one of the first questions I asked. So what are we trying to accomplish here? What is your goal, right? But I asked a lot more questions, but I'm kind of highlighting the main questions and why I asked it. Okay, so work history. Why is work history important? Because you got to pay for the mortgage, right? You have to be able to have some sort of proof or documentation or something that we can depend on to make a decision if we can lend you money, because we're using 2 years of your history to make a 30-year bet. Okay, so basically, I'm going to loan you money that I'm asking you to pay for 30 years. I'm only asking for 2 years of information. You know what I'm saying? And why is 2 important? 2 is important because we need to see consistency. Okay, so let's say you make $1 million 1 year and you make 0 the next year. If there's no consistency, I'm not going to qualify. Okay, but if you make $50,000 1 year and $50,000 next year, that's consistent. That's 2 years. Without 2 years, I don't know what's consistent. I only have 1 year. There's nothing to compare it to. That's why 2 years is important. Okay, so I need 2 years important. So that's why work history is important. Income per month. Why is that important? Because of course it helps me determine your buying power. Okay, if you make $1,000 a month, you can't get $8,000 mortgage. It's not going to happen. But if you make $4,000 a month, then $1,000 mortgage might work out. Okay, so that's why I asked that question. In reality, I'm going to want to actually look at your pay stubs and actually do the calculations. But I want to know your opinion as to what you think you make. It's especially important when it comes to self-employed. Okay, so again, I need 2 years work history. If you're W-2 or you're salary hourly, it's a little bit easier to determine how much you actually make, right? But if you're self-employed, your commission, it's a little bit harder, okay? Because some people don't report everything. Some people have losses because they own a business. Maybe you drive a car, maybe you're Uber driver, right? You've been doing for 2 years, make this much money Uber, but then you got to pay for your car, you got to pay for maintenance, you got to pay for gas, et cetera, right? So self-employed is a little bit more difficult. But I will ask those questions. And the question is, are you W-2 or are you self-employed? Self-employed, okay, you know what? We're going to stop talking about it. Do you have 2 years? Okay, great. Is it on your taxes? Okay, great. No more conversation. I just need to look at your taxes right away. That's basically what's going to come down to. There's no conversation you and I are going to have where I can actually know what you're making. I have to look at your taxes. Whereas if you're W-2, your salary and hourly, I can probably do the math on my calculator. Okay, you have a question real quick? Go ahead.
You say 2 years, you mean like, are they looking at how much make years, 2 years, or are they talking about like payment history?
2 years, 2 years, what you're doing and how much you're making, period, right? So I'll give you an example of what 2 years mean. Let's say you were a skydiver for 1 year, and the next year you decide to become a masseuse. Those are 2 different jobs. It might not work out. I mean, it would be an underwriter question, right? But let's say you sold cars for 1 year, and then you sold airplanes for the next. That might work. I don't know. I have to look at it, right? Payment history for what kind of payment history? What do you mean? This is about work history. So I don't know you about payment history. Bottom line, commission is easier than self-employed, if that's what you're asking. If it's from a company, it's a lot easier. The reason why, because normally when a company pays you a commission, and the question she asked is commission, what's the difference between commission and self-employed and W-2 salary, right? The reason why commission is still easy to calculate, because I have a record of it. I can ask your company, I can do a VOE, verification of employment. I can call your boss and say, hey, listen, this person says she makes this much, she gets this much in bonus and this much commission. Do you confirm that? Okay, great. Do you think this is going to continue? Yes? Okay, great. If the answer is no, then we're in trouble. Then you're.
Okay, I got a question back. So is you a 1099 on the commission? Do you count as a 1099 as long as that person, that employer, and verify for the employee?
The bottom line is if I have a record of it, it's easy. If I don't, it's impossible. Most people who have a business, and I'm gonna say most people, this is from my experience, most people have a business, have a really creative, really good CPA that writes everything off. So they're making $100,000, but on paper, they're making $10,000. You can't avoid paying taxes, guys. If you wanna prove income, you gotta pay taxes on income. You know what I'm saying? But that's what I'm seeing the most. And that's why this conversation is very difficult. And that's why I told you, see how many questions got asked? When I asked someone, are you W-2 or at some point, okay, you know what? No more question about some point. Have you been 2 years? Okay, great. I need your tax returns right now. No more conversation. It's too complicated. There's too many what ifs and this and that and left and right. I need your tax returns. Give it to me right now. Otherwise,
That's what we might get more people. Because I'm gonna tell you right now, what you doing? Because believe me, I've been in battle for my employees to do this. You come into a lender, they show them, like I said, commission, get into a 1099, they start throwing up all kinds of stuff that doesn't make any sense.
Yep.
They've been paying, doing everything right for 10, 15 years. They can't get a house because all of a sudden, looks like they loan you. Or come back to you, and what you just said was absolutely freaking brilliant. And I come to you, I'm not gonna just use you as an example.
right.
I work my butt off to get a house. Now I'm coming to you, you use all this stuff. I'm telling you from my heart, listen, man, I did all the right thing. They're using me to get to you, and you won't even listen to myself. Here's my documents. Because you know what? I was one of them. And God got me right now. I have to leave this. But listen, I'm coming to you, and I just met you right now because this is needed. Because I deal with the poorest part of Dallas. And everybody want to be in the house. But what you just said, because I deal with hedge fund guys, and they only buy debt. And nobody, I dealt with, I'm sorry, please forgive me. Because this is emotional, because I'm fighting for my employees. And they're begging, I'm sitting there crying. I'm crying with them. I'm about to cry right now. And what you just, I never heard. Never heard. Never. And what you just did right now is to open up our eyes. This is what we need. Because we don't need all this stuff on the wall. We need facts and know what we need because the system is already programmed to get stuff. Because the hedge funds guy is going to buy it out. That's the truth.
Absolutely. Yeah, it's such a convoluted system that you need advocates like ourselves.
I'm calling you guys.
But yes, the system is very convoluted, very complicated. That's why you need professionals to help you, because we, even ourselves, even us have a hard time understanding everything. We don't know everything. Half the time I have to ask someone else, right? So that's why self-employment, no more questions. Let me see your tax returns. That's it. Because you and I are going to talk for like an hour, and we're not going to know the answer. You know what I'm saying? Because I need to see the numbers. Okay. So W2, let's go on to the next. Let's go on to the next question. Self-employed, no more conversations. Just let me look at your tax return. Okay. Next question: credit scores. This is a funny question. She talked about it. He talked about it. When I ask person credit scores, I'm asking them not to call them out, but just to see how far they've gotten into the process. Maybe they've done some research. Maybe they apply with another mortgage person. Because sometimes I'll ask them, what's your credit score? It's like, oh, the last lender I tried to apply to told me I got a 640, but they didn't give me a loan. I was like, wait, a lender said you apply for mortgage? Like, yeah, then I know that that number is accurate, because all lenders across the country, maybe in the world, I don't know, but across the country, we all use the same system. So if a lender in California pulled their credit as a 640 yesterday, I'm gonna see a 640 as well, period. Okay, we use the same system. It's called FICO 4, 5, and 2. Okay, we all use the same system. But if I ask them what's your credit score and they go, oh, it's a 700. Okay, where'd you get that? Credit Karma. That's why I'm like, I don't know. That's gonna be correct. Okay, but I'm gonna write it down. I'm gonna write it in my notes that you think you have a 700, because I already know I'm gonna have a prepare a conversation where when I pull your credit, and instead of being a 700, it's a 650, and you're gonna blame me for it. You're gonna be like, well, my score is 700. You said 650. You must have lowered my score. No, not true. It's just that you were fed bad information. You know what I'm saying? So that's why when I had this conversation, I'm gonna prepare you. I'm like, listen, I'm glad that Credit Karma says you have a 700. I don't know if that's what we're gonna see, because that's an inquiry. Obviously, you're getting information from a consumer credit where there's no inquiry. You didn't pay anything for it for the most part, so it can't be completely accurate. What I do is I ask the inquiries from the bureaus who own your information, the ones who who are basically selling it off, and I inquire and I pay for the information, and they give me the true information that all lenders have agreed to use to grade people on their mortgages, okay? Then I ask, how much do you pay monthly on a credit card, debts, car notes, and student loans? When I ask that question, I'm asking you, what do you pay, or what are you obligated to pay in terms of liabilities every single month? A phone bill, electricity bill, those are not debts. Those are services you're constantly paying month by month, and if you stop paying, you stop getting it. But a debt is something you owe, period. You got to pay it no matter what. Just like when you go buy a new car, just like when you buy something from Cons, a furniture or a microwave or whatever, right? Or if you have student loans, you owe that money. You have to pay it back. That's what I'm concerned about, because that's what's going to be on your credit report. And that's what's determined on your debt to income ratio, okay? Debt to income ratio is how much money you're making versus how much you are obligated to pay on your credit report, okay? There is a percentage that all loan companies, all investors, they all have a certain expectation. Normally the number is around 40%, okay? 42, 43, 45, 40% is a good number to be at, okay? 50, that's a little bit more riskier. There are some programs that allow that, but for the most part, 40% is the right number. So if you want to do the math in your head real quickly, if the amount of money that you're making versus the amount of money that you have in debts is already at 40, you're not buying a house. Okay, go ahead. I'm sorry? If the amount of money you make divided by the amount of money you owe on your credit report is 40%, you're not buying a house, period. Because you're already at 40% DTI before you have a house. And 40% is the max that they'll let you have total. You know what I'm saying? Now, if you're at 10%, then you have 30% debt to income ratio to play with. So you can actually do the math and figure out how much house you might be able to afford on a monthly basis. But the way I try to help people understand how much they can afford, if they can even afford a house, is just do the debt to income ratio calculation right now without a house, meaning you don't have a mortgage payment yet. If it's already at 40%, you're not going to be able to buy a house, period. Go ahead. Well, then that's easy. That's easy. It's about 30% on the front end, 30% on house alone. Okay, they won't really go above that. So basically the way you calculate it is, you want to know what your monthly payment can be in terms of a house, right? Because that's what determines your purchasing power. 30%, 30% income, yes, ma'am. Yeah, so let's say you make $10,000, then that's $3,000 you're allowed to put into a mortgage payment. You can search online, how much does $3,000 a month buy in this market, and it'll let you know what the purchase price is about, okay? It's a good way to kind of reverse engineer your expectations, but in reality, you should talk to someone like me, okay? But I'm just kind of giving you some math to work with, okay? So that's what debt to income ratio is. Credit scores, just be real quick about it. 580 is the minimum for the most part to get an FHA at 3.5% down. Most lenders are not doing that right now because of COVID and everything else. They've actually increased they call it overlays. They've increased their overlays to about a 620 to 640, okay? VanDyk Mortgage, who I work for, we still do 580s. A lot of it's because we still service our own loans. We warehouse our own money. You know, we're a direct lender, so we're willing to take a little bit more risk, because most of the loans that lenders loan out, loan for, they actually take that loan and they sell it to the secondary market, like Wells Fargo, Chase, whoever, right? So they basically package the loan after they buy the house, and then they sell it off and they get their money back to go do another loan. You know what I'm saying? There's expectations these investors have for a loan to be, for something they're willing to purchase. We call it being sellable, right? So that's why they have these guidelines. It must be a 580 credit score. The debt to income ratio must be this much. The house must be like this. Okay, that's a good loan. We're going to go ahead and buy that from you guys. Okay, it's buying debt, like we talked about, right? We're willing to risk the fact that it might not sell. Meaning, like, let's say we take a riskier loan and the investors aren't willing to buy it. Well, we have the abilities to service it ourselves. You know what I'm saying? So that's why we don't have overlays, is what we call it, which is an extra restriction on top of what's already agreed upon by Fannie and Freddie. Okay, so Fannie and Freddie, it actually will go down to 500 credit scores. We won't go below 580. Okay, well, there's exceptions. Okay, but that's a little bit complicated information or conversation. Just know that 580 is where you want to be at. Now, some people think if you have a 580 credit score, you're going to qualify automatically. That's not the way it works. 580 is where you have to be in order to even be considered. Okay, so you have a 579. Doesn't matter if you're a millionaire. It doesn't matter if you have all the money in the world. 579, you're not going FHA with a 3.5% down. So I consider it a hard stop, not a qualifier, right? So when people ask me, what do I need to qualify? Well, you need at least a 580 to not be qualified, is the way you should look at it. Okay, it's a hard stop for FHA. Conventional is 620, but more than likely, if you have a 620, you're going to end up going FHA. Okay, because the underwriter system, which I describe it as sort of like a algorithmic robot mortgage god that knows about all mortgages and systems and all the different loans. And when you input the information into the underwriter system, then it spits out an answer, approved or needs work or refer. There's different terminologies, ineligible, whatever, but we need to get approved eligible. And the robot god determines that after we submit a loan based on the structure that we set up, meaning credit scores, how much you make, how much funds you have, job history, things of that nature, right? So 620 is a hard stop for a conventional. That means you're at 619, you're not going conventional at all. But if you're at 620, you have a chance of going conventionally. And if you do, then you might actually want to consider both options, FHA or conventional, because conventional might be higher rates, right? It might be tougher. You have to pay more in rate costs. They call it discount points to qualify, things of that nature. So 620 is kind of iffy, but at least 620 to qualify for conventional. Now, if you want the best rates, meaning where the rates are going to be the lowest, or you actually see a benefit to buying, a 680 is going to be about where you want to be at. Okay, 680 plus. Okay. All right, moving on. The next question I asked. Okay, go ahead. It all depends. It all depends. You actually might end up with a better rate FHA than conventional because you have a high score for FHA, but you have a low score for a conventional. If that makes sense, right? Plus FHA has other fees, so maybe the rate's lower with FHA, but it actually costs more because of the mortgage insurance or whatever, which FHA has upfront mortgage insurance, which actually might make it more expensive. You know what I'm saying? So it really depends. There's no hard or fast answer to that question. Yeah, but it doesn't make a difference. You still have mortgage insurance until I think 17 years. Yeah. Actually, the weird nuance is if you put 10% down, after 17 years, you can drop mortgage insurance. But most likely you're not going to do that. Most likely you're going to FHA, and then I'm going to call you 2 years later and refinance you into conventional. Because your credit scores will be better, you have equity, et cetera, et cetera. So I mean, I'm not saying it doesn't happen, but more than likely you're not going to go 30 years of FHA, if that makes any sense, okay? Because you can get rid of mortgage insurance and your scores are better, et cetera, right? Okay, so next question. This is actually the third question I asked because I asked about the job, I asked about the credit scores. The next question is, do you have funds prepared for a home purchase? Okay, and if someone goes, you're not ready to buy a house. Okay, if I ask you, do you have funds set aside for closing? Yeah, kind of. You're not ready. You need to be like, yes, I have 10%. Yes, I have 5%. Yes, I have $5,000. Yes, I have $3,000. You need to be confident. You need to know, because if you don't know what you're getting yourself into. Buying a house is very expensive. Okay, it's going to take money out of your bank account, and it's going to be also stressful. So, what situation do you want to be in where your bank account is being cleared and you're stressed at the same time? You don't want to be in that situation. You want to go in comfortably. You want to go in smooth and prepared. Okay, so when I ask this question, I'm asking for two reasons. Number one, I want to know how prepared you are. And number two, I want to know what kind of conversation you want to end up having. Is this going to be me coaching you as a first-time homebuyer that, hey, you might not be ready to buy a house? Or is this me telling you, hey, you know what? I'm glad you have $5,000. You might need about another $6,000 total, right? So it depends on how they answer, how I treat the rest of the conversation, okay? So if someone goes, well, I don't really have anything set aside, I'm hoping for zero down, down payment assistance, you're still not prepared, because there's no such thing as a no money out of pocket loan. It simply doesn't exist. You're gonna pay something. You're gonna pay for an appraisal. You're gonna pay for closing costs. Something's gonna come out of your pocket, period, okay? Or coming out of someone's pocket for the most part, okay? You can't buy a house with no money in the bank, is basically what I'm saying, okay? So another question I asked, the 401k or savings. For whatever reason, I asked this question and a lot of people don't, or I don't ask this question. I ask, do you have funds set aside? And people say they don't have any funds, but they don't tell me they have a 401k or they have a savings. Okay, so that's why I'm bringing it up. Okay, so I had people tell me, yeah, I got about $2,000 in the bank, which is not enough for anything, but they have a 401k with $30,000. Okay, well then you have the funds. You have more than enough funds to close. But I had to dig that out of them. You know what I'm saying? So I think most people don't realize that a 401k is a strong option to use as funds, right? It's almost like in their mind, they forgot they had it, or they think it's like something that they can't get into until they actually retire, which is simply not true. 401k is used all the time for down payment. In fact, they encourage it by giving you tax breaks and benefits to using the 401k to buy a house. It's one of the best reasons to use your 401k, okay? So I'm only bringing it up because a lot of people don't realize that, but in reality, it doesn't matter because most people don't have a 401k, okay? All right, so again, when I ask for funds, okay, I need to know at least you have 3.5% down for FHA, at least 5% down for conventional. There's a secret conventional, and I call it secret, not because no one talks about it, it's because no one knows about it. It's called the Home Ready, which is only 3% down, but it's conventional. There's a certain stipulations behind it, like you can't make too much income, things of that nature. And that's another conversation, but I just want you to know that there is a conventional where you can put only 3% down, okay? VA, which is a loan for veterans or people that are in the military, that's 0% down. If no one here is in the military, then this conversation doesn't mean anything to you, okay? USDA, 0% down. The reason why that's relevant is because we're literally 10 minutes away from USDA territory. Prosper is all USDA, right? So basically, if you're willing to buy in Prosper, you can qualify possibly for a 0% down loan. There's a few things that matter. How many people live in the house, meaning do you have children? Do you have like a brother living there, et cetera, et cetera, et cetera, right? But for the most part, if you have a 640 plus credit score, you don't make too much income, you have a lot of kids, USDA is a great option, okay? It's a little bit more complicated, a little bit more work, but worth it to not put anything down, okay? And again, we talk about closing costs. Closing costs, a lot of people forget about this. A lot of people forget that you gotta pay for processing, underwriting, you gotta pay for an appraisal, inspection. You have to possibly buy down the rate. There's things that come along with buying a house. Title, right? You have to have title, you have the money to put into escrow, like your future taxes and your future insurance, right? And the ladies actually kind of talk about closing costs. The reason why I'm talking about closing costs now and I'm emphasizing it because people forget about it. They're like, yeah, I got 3% down. Okay, what about closing costs? Oh, I was hoping for, well, how much is your closing cost? It's all pretty much the same across the board, anywhere between $2,000 to $5,000, right? So 3.5% down plus $2,000 to $5,000, you're pretty good. So that's why when people ask me, how much do I need to put down or how much do I need to have set aside to buy a house? I go about 10%. Even though we have a 3.5% down, even though we have a 5% down, and even though we have a 3% down mortgage loans, I still think you need to have at least 10% in order to feel safe, right? Plus, we don't want to make you cash poor. That's the worst thing that we can do to you is put you in a mortgage and your bank account says 0, right? We don't want that. We want you to have reserves, right? So even though we tell you you need to have $10,000, we only need 7,000 of it because we want you to have 3,000 in the bank when you close so you can make your mortgage payments or you can buy furniture. You don't have to eat ramen, right? So that's why we might need more than what you actually are using towards actually getting to the house, okay? Student loans, this is another question, and I'm glad the credit expert mentioned it because student loans, the reason why it's important because a lot of people are in deferment, meaning they're not paying anything on it. It's income-based or whatever, or they're still in a situation where they're allowed to qualify for 0. Some cases we can use that 0 as the payment, but in most cases it's gonna be 1%. Right? So what I mean by that is if you have $1 million in student loans, we have to hit you every single month for 1% of $1 million, right? Which is like what, like 10,000 or something like that? That means you have $10,000 monthly debt added to your debt to income ratio. You're not buying anything. You know what I'm saying? So that's why student loans are very important. I'm going to ask you, also I'm going to ask you, are they in forbearance? Because if they're in forbearance, you need to get out of it because forbearance is basically you saying on paper, you can't afford to pay your student loans. If you can't afford to pay your student loans, how can you afford a mortgage? You know what I'm saying? So you need to be out of forbearance in the student loans. And the reason I'm bringing this up because I see this a lot lately in the last 12 months, where people have their student loans in forbearance, and sometimes it was done automatically, like by the company, not by you. You didn't ask for it, it was done by them. And because of that, we have to wait, or we have to get it modified before we can qualify them for a mortgage application, right? So like I said, deferred versus forbearance, and income-based payment, meaning whatever you're making versus the 0% of total debt. 0% is kind of a general number. In some loan products, it could be 0.5%, right? Or half of percent, whatever, okay? Red flags. Okay, so this one, and hopefully I'm not going too far ahead. Maybe I'm about 5 minutes past, so I'm almost finished. Red flags is a very general question. So the last part of the question, I go, do you have any red flags that you want to volunteer? And when they, what do you mean by that? Well, do you have money owed to the IRS? Are you being sued by somebody? Are you in the middle of a divorce? You know, have you been divorced? Has there been a bankruptcy? Has there been a foreclosure? Do you owe back child support? Lots of things that people, I guess, don't think about. So I bring it up to hopefully get it out of it, because again, if someone says, oh yeah, I owe like $1 million in child support, you're not qualified for anything. I don't care if you make $1 million a month. I don't care if your credit score is 800. You're not qualified for anything. And actually, someone got mad at me when I told them that. The same day said, oh, I got a bunch of back child support. I go, well, then you can't qualify until you get caught up on that. It's like, well, what if I have perfect credit? I'm like, it doesn't matter if you have perfect credit. You owe money to the government. You're not getting a mortgage. And he got mad at me because they found something in Google, but they were wrong. Okay. So that's why I ask these questions, because again, I'm trying to protect credit, like I told that gentleman there, right? If you have back child support and you're not going to get current on it, there's no sense in you applying for a mortgage with me, because I don't care what your credit report says, you're not buying a house because the back child support is going to stop you. Okay. It's part of the guidelines. If you don't have it, they call it a KVERS, which is a search, it's like a background search. If you don't have a clear KVERS, you're definitely not qualified for any government loan. That's USDA, VA, or FHA. You're out of the box for that one if it's not a clear KVERS. And the clear KVERS could be something as simple as a student loan that you owe, right? If it's on there, you're not going anywhere. You're not buying anything, okay? And for the most part, conventional, same thing. If you owe back taxes to the IRS and you don't get current, you don't plan to pay them, you're not buying a house. You have to get current on that, or you have to have some sort of payment plan in place, right? They're very, very strict about that kind of stuff, right? But if you do have red flags, I don't want to answer questions about that. It's just too much. Just call me. We'll talk about it. Okay, and that's why I have that answer. All right, so you can contact me, Larry Lee, 832-606-2193. My information should be already in your folders. You can just Google me if you forget everything. You lose that, Larry the Mortgage Guy, you'll probably find me. Larry the Mortgage Guy in Frisco. You'll find me, okay? All right, thank you very much. Any questions or anything for anybody on the panel? Yes, there's absolutely income limit, and there's actually a way to check that. You can probably Google it and go, what is the income limit for USDA? And they'll actually probably lead you to a website where you actually put in the information on the official USDA site, and then it can determine. But yes, USDA, the reason why USDA is very complicated because it determines a lot of different things, like the area, the age of your children, how many children you have, or who has a job there. Is there anyone with a disability? You know, are you paying child care? There's lots of different variables that determines whether or not you qualify. So let me put it this way: you might make $100,000, but according to USDA, you only make $60,000 because of all the children you have. You know what I'm saying? It gets adjusted based on the information you provide. So the answer is yes, but it's impossible for me to tell you what it is.
And also, if you're thinking about USDA loan, would it be better to go to the USDA local office and start the loan there, or?
It's a matter of opinion, right? I've heard that some people like to do it that way, but in reality, it's better for you to go to a loan officer, in my opinion, because we at least explore every option. You know what I'm saying? Maybe USDA is not the best option for you. Maybe FHA is. You know what I'm saying? So if I say that you're better off with USDA, you can go ahead and decide to go and directly to them and talk to them yourself, and then you decide which way is the best way. But I would implore you to not just go straight for USDA. I would implore you to talk to a lender to at least look at everything and tell you whether or not USDA is a good option. If that makes sense. Any other questions? And I want to emphasize for you guys, and I'm pretty sure they will follow up as well. This is not like, hey, nice to meet you. I'll see you later. Peace out. We're trying to start a conversation. We're trying to start a relationship with you. So you always ask questions later. If you leave here and you're like, man, I should have asked, Amber this question, just reach out to us. We're giving you information to do that. In fact, we want you to do that because we're trying to earn your business. We're trying to make you our clients, obviously. So we want to do whatever we can to earn it. If that means being available to answer questions, by all means, that's what we do anyways. So please realize that this is just the beginning and not, the last time that we plan to see you. Hopefully we see you guys in home at least by 2022. That's the goal at least.
I guess the question is, who learned something?
That's good. That's good.
Wonderful. You guys can get your
I'm gonna check the Zoom real quick to see if anyone in Zoom asking questions. There's actually 3 participants on the call. Let me see if they ask any question. No one asked questions. They're just quiet.
Thank you guys for hopping on.
There it is.
Charlotte, oh, yeah, Charlotte and Moore, that's one of my clients, and I can't wait to help you, Mr. Larry, back to back.
Yes. Thank you for attending. Absolutely. I said 3 participants, but I counted 1. So it's actually only 2
That's
participants.
true. Hello, Ralph. Can't forget Ralph. Hi, Ralph.
Yeah, Ralph is one of my agents.
Oh, is he? Yay.
And sorry if the quality of the sound wasn't that good. Honestly, the guys are kind of spread out. You guys can see. If I wasn't bogged down and trying to create the presentation, I would have pushed all the chairs up closer. When I do presentation for myself, all the tables are right here. They're always right here. You know what I'm saying? That way I don't have to yell to talk to them. And if they ask a question, the mic can hear them.
And my wife always tells me I'm too loud anyways. Standard data.
But yeah, I want the people to be comfortable too. So if someone wants to sit in the back and chill, that's cool too.